Well, welcome to Beers with Rich. I'm Rich, founder of Under the Radar Report. This, mark my words, is an exciting Beers with Rich because it's been an exciting start to 2024. We're literally in a bidding frenzy. I mean, check out this week's report. You'll see loads of stocks that have climbed 30% plus, and the good news is there's loads more to come. I talk about two of them later. I mean, look, before I get into that, like even AVA today's up, is just up 25% on the bid because of a deal with Telstra. Well, I can tell you something, you won't see Telstra up 25% in one day, but you'll see that from small caps. Look, let's get to the big news. The big news is that we've embarked on a Get Rich with Rich campaign. That's right, Get Rich with Rich. Let's talk about it. Basically, the first thing to note is that part of this our decision-making process, is that every Friday we spend half an hour, Caroline and I, talking about our share portfolios. So we spend half an hour going through the checklist that we've developed in the building wealth from scratch in the stock market. So it's a practical strategy, it's a practical system. That's the basis of it. And it's all about maintaining and building your share portfolio. And if we didn't do it, we certainly wouldn't advise anyone else to do it. Speaking of which, let's talk about the Get Rich with Rich campaign. What does it involve? Well, I'm doing the $500 strategy. I'm adding this $500 strategy to existing investments. So this is part of the Building Wealth from Scratch course that I'm doing, the $500 strategy. Only I'm fast tracking it. So I'm doing it, instead of monthly, I'm doing it weekly. So I'm investing $500 a month. Instead of $500 a month investing, I'm doing $500 a week. So this is what it's about, the pathway to building wealth. That's what we're about. So let's talk about the other thing that we're doing. We're investing $1,000 in every stock we recommend as a buy. That's over 40 small caps and mid caps in Under the Radar Report, and at least 11 blue chip value stocks that we currently have buy recommendations on. So we've always been investing in the ASX shares we've been recommending, because we know that the point of investing is being practical, and being practical means putting your money where your mouth is. I mean, you can't get any more practical than that. And that's me, practical. Well, not always actually, if you want to ask Caroline. But look, let's not forget that we're entering the rump of the ASX reporting season. So we're going to be watching every stock we recommend like a hawk and updating you on the big, the small, the good, the bad, everything. So that is what we're doing this month. So these issues are must read. And what I talked about at the start is really happening, the bidding frenzy. So we are in a bidding frenzy for ASX small cap shares. And that's the product of, an extended period of small caps to a greater degree being in the doldrum. So investors are recognizing value, and it gets to the point where you can't ignore value, because at the big cap end, there's not as much chance to get that value. So people always go where they can get the biggest expected return. Don't understand expected return? Get a hold of Building Wealth from Scratch in the stock market. It will solve that and many more problems. So let's look at what I'm a buyer of. So two companies in this week's report are worth mentioning because I reckon they're great opportunities. Airtasker, yes, I'm a buyer. Airtasker, ART code, and Ansarada, AND code. Airtasker is basically a jobs outsourcing vehicle that's got significant traction in Australia, so it's cash flow positive, a foothold in the UK and a toehold in the US. I've met the CEO, Tim Fung. He's an impressive guy. He's young. He learns quickly. he's like his company Airtasker. So the vehicle has heaps of operating leverage. If he gets it right, it's got a lot of legs. So I particularly like the deal they've done with Channel 4 in the UK. There's a lot of opportunity there, but there is significant risk. So it's a matter of marrying up that risk with what your portfolio goals are. And Serata, the other stock, AND, is also a company that's young and maturing quickly. And might I say nicely, this stock is moving in the right direction, and it's not too late to get on board. The company operates virtual data rooms. So we all know that data security is front of mind at the moment for all corporates, for everyone actually. But the corporates can pay the most. And these guys service the big end of town. It's increasing as the company's increasing in sophistication. That's why our analyst likes its prospects and the momentum it's getting. So let's just talk about under the radar report. We exist to give people a pathway to build wealth. That's why we exist. We're also an independent stock research house, backed by an analyst team with over 150 years of experience. That's a big deal. All we care about is making money for subscribers. That's how we make money, is when you make money. And that's summed up in Get Rich with Rich. So with that in mind, I'm back on the zero alcohol beers. This one's called Hiatus. I think it's from somewhere in the eastern suburbs, but it certainly does try and give a Pacific flavour. Having watched Fiji play in the World Cup, I could use a bit of the Bulla Bulla these days. Well, it's certainly frothy. It's fruity. It's definitely fruity. It's one of the fruitier zero alcohol beers I've tried. I'm going to enjoy finishing it, and I'm going to enjoy reporting back to you on the Get Rich with Rich campaign. Talk to you next week.